Let's take a deeper dive into one of the most important points about pre-settlement funding. It's not a loan. I know when people first hear about pre-settlement funding, they're thinking, that just sounds like a loan, or isn't that just debt with a different name? It's completely understandable to have those questions. After all, when you hear phrases like cash advance or lawsuit loan, it's easy to draw comparisons to traditional loans. But the truth is, pre-settlement funding is nothing like a loan. And here's why. First, there's no credit checks or financial history required. Let's start with how a loan works. When you apply for a loan, whether it's a personal loan, a car loan, or even a credit card, the lender looks at your financial history. They want to know your credit score, your income, your debt to income ratio, and whether you are a safe bet to repay the loan. But pre-settlement funding doesn't work like that. Your financial history doesn't matter. Why? Because pre-settlement funding is based on the strength of your legal case, not your credit score. If your case is strong, if there's a high likelihood of a favorable settlement, you're eligible for funding. This is a huge relief for so many people. Think about it. If you've been out of work because of your injuries, your income might be zero. If you've fallen behind on bills, your credit score might have taken a hit. And if you've already dipped into your savings or maxed out on your credit cards, traditional lenders might turn your way. But with pre-settlement funding, none of this matters. You're not judged by your past or your financial struggles. The only thing that matters is your case and the justice you're fighting for. For example, imagine a mother who's been injured in a car accident. Her medical bills have wiped out her savings, and her credit score has taken a hit because she's fallen behind on her mortgage payments. She knows she has a strong case, but no traditional lender would ever approve her of a loan. But pre-settlement funding offers her a way to get the financial relief she needs, regardless of her financial history. 2, there's no monthly payments to worry about. Another key difference about pre-settlement funding and loans is that there's just no monthly payments. When you take out a traditional loan, you're expected to start paying it back immediately, usually in monthly installments. This is true even if you're struggling to make ends meet. Lenders don't care if you're injured or out of work or waiting for your lawsuit to settle. They want their payments. But pre-settlement funding does not work that way. You don't have to pay anything back while your case is still ongoing. Think about how freeing that is. If you're already struggling to pay for groceries, rent, and medical bills, the last thing you need is another monthly payment hanging over your head. Pre-settlement funding gives you the financial breathing room to focus on your recovery and your case, without the constant worry of how you're going to make another payment. James, the construction worker who fell on his job, shared this with me. When I heard that there was no monthly payments, I couldn't believe it. I thought, this can't even be real. But it was. The funding gave me the money I needed to take care of my family without adding one more bill to my plate. It was literally a game changer. Now, let's talk about the most important difference. Third, there is no risk if your case doesn't succeed. Pre-settlement funding is risk-free. Here's what I mean. If your case doesn't resolve in your favor, if you don't win or you don't reach a settlement, you don't repay the advance. I'm going to say that again. If your case does not succeed, you don't owe anything. This is called non-recourse funding. This is the biggest reason why pre-settlement funding is different from a loan. Think about a traditional loan, whether it's from a bank, a credit card, or even a payday lender. You are required to repay it no matter what. Even if you lose your job, fall behind on payments, or face unexpected financial hardships, the lender expects their money back with interest. If you can't repay, your credit score takes a hit, and you could face collections or even legal action. But with pre-settlement funding, that risk doesn't exist. If your case doesn't result in a settlement or a favorable verdict, the funding company absorbs the loss. You walk away and you don't owe anything. This is why pre-settlement funding is a true lifeline for so many plaintiffs. It allows you to get the financial help you need without the fear of being stuck with debt that you can't repay. Maria, the single mom who was injured in a car accident, shared with me, I was terrified of taking on more debt. I thought, what happens if my case doesn't settle? How will I ever pay it back? But when I learned that I would not owe anything if I didn't win, it gave me the confidence to move forward. I could breathe again.